Welcome to TradeTheNBI.com. This is John's reports for the 2nd of October. Not a whole lot of change. We were expecting a little bit of sideways action. We finally did get the DOC here, orange to dip below. Gives a little bit more impetus to the long side of things, but the problem is with that shakeout being as deep as it is. It's likely to still be modest within that 23%. We were looking for a move back up towards the 23% when we saw the magenta pop back up, even with white NBI leading, but did just that and then faded off. So we didn't expect that there would be any continuation from there. And that's consistent with being back at the positive extreme retrace that we had marked from all the way back in June that we finally returned to. So, while some people think this may be a significant retrace, not really a whole lot of much, given the valuations that we're at anyway. From an NQ standpoint, a little bit better. They got a little over the 23%. It's been outperforming the S&P anyway, but faded back into it, but still relatively higher than where the S&P is. And readings are pretty much identical. So you're getting this positive, but coming this deep from a DOC readings below the 23 range, usually you get the move back up and then it comes down, forms a higher pivot, which usually results in either the same or near low. If it's a lower low on the higher readings, then we know we got the potential for a nice bounce from there. So those are the things we look for. From a treasury standpoint, again, it's a pretty decent sized yield for people to be drawn to over being in the market at this particular stage. So that puts a bit of pressure on the market. And the only thing that helps ease things off a bit is, if oil contracts a bit, but still, we're over 90. When we were talking, we were down in the 70 and breaking down below 60 range would have been a real boon for economic growth. This is just the opposite. It's just a killer. And you know that that's going to push inflation towards the end of the year. And particularly when you talk Eurozone, things like that, it puts a whole lot of pressure because they've got to buy everything in U.S. dollars, and with rates higher and that, it just causes a capital flight. And even though they tried to make the push back up and really defend where they're at now, it's going to get tougher and tougher for central banks to keep that one afloat. Just no question about it. So there's going to be some intervention there. In the surprise move, opposite of oil and that, gold still being put under pressure, and this is a beautiful thing when you get too many people thinking that gold has to rise immediately. It does have to rise, just not right when you think it does. So this added pressure is interesting in this particular aspect. So when a buy does come, I think it's going to be a very attractive setup from a nice discount. And interestingly enough, though, you're not getting that from a crypto. You would think that the same pressure, but at the end of the day, there really hasn't been as much enthusiasm into the crypto space recently. So there's been just very modest moves, and doesn't take much to really move that compared to a gold market. And same situation with ETH, a little bit more positive from those readings with that strong MBI lead above and then dip below orange. So you can see it took a while for that improvement in the shakeout. This is what exactly I was talking about. Relatively same lows, much higher shakeout reading, and then the improved DOC above negative 13.5. That's enough to give you a spark to start to move things. And it's an indication that you've had a series of buy activity within the selling, just to absorb all that extra supply and keep it at the cheaper price without really pushing things. And then when they've acquired enough, that's when they accelerate it, and it's like boom, boom, boom. From the 50K standpoint, we pushed up to those highs. We had that peak white, which expects a move at least to the 50%. And if you have continued white, you usually expect to move down to the zero. We got down just below the 23%. That caught some buying activity. And then the red MBI leading in that one, usually doing you're not going to get a whole lot of push anywhere. And that's exactly what happened. It was not a whole lot of push. But now you have MBI white leading at the close going into the beginning of the new month. And we're a couple of days away from at least having new fund money. So that continues to put potential downside pressure on things. If we look at from an intraday standpoint, we had a little pop, and then just weakness after weakness. Every attempt was met with MBI white leads. And every time you get those, it's a beautiful signal to be prepared as soon as you get that beginning of a magenta fade, particularly when it happens below that 20 5 signal line. That's the white one right here. When that magenta gets below there, it really starts to get weak, and you can see as that crossover happened, that's when significant selling. And then, the turnaround move can be strong, except for when you get that red lead, usually fades off. So I wasn't expecting any break of that at this particular stage. And with the NBI white lead, made new lows back to the 0% again, and then started at the end of the day. That one held up fairly decent because there was a little bit of softness from NBI white. But short profit taking, and they were good with that, and they'll start it up again at the beginning of this week, and it'll be interesting because as we get to the midweek, new fund money and that should start to roll in, and if there's been enough of a discount created, I think you'll see some people jump back into things and feel like they've gotten a discount, a nice bargain. New indicators went out, so that's the long and the short of things. As always, though, trade well. We'll talk again later. See you on Skype chat.